Are you worried about a housing bubble? Hi Internet, Dave Noyes here with some clarification of what's happening in the Asheville real estate market. You may be reading headlines and hearing talk about a potential housing bubble or crash, but it's important to understand that the data and expert opinions tell a different story. A recent survey from Pulsenomics asked over 100 housing market experts and real estate economists if they believe the housing market is in a bubble. The results indicate most experts don't think that's the case. A strong majority, 60%, said the real estate market is not currently in a bubble. While 32% yes, we are in a bubble, 8% said they weren't sure. In the same survey, experts give the following reasons why this isn't like 2008. The recent growth in home prices is because of demographics and low inventory credit. Credit risks are low because underwriting and lending standards are sound. And if you're concerned a crash may be coming, here's a deep dive into two key factors that should help ease your concerns. 1. Low housing inventory is causing home prices to rise. The supply of homes available for sale needed to sustain a normal real estate market is approximately 6 months. Anything more than that is an overabundance and will cause prices to depreciate. Anything less than that is a shortage and will lead to continued price appreciation. Back in the day, there were too many homes for sale from 2007 to 2010, many of which were short sales and foreclosures, and that caused prices to tumble. Today, there's still a shortage of inventory, which is causing ongoing home price appreciation. Odetta Kushi, Deputy Chief Economist at First American, explains the fundamentals driving house price growth in the U.S. remained intact, and the demand for homes continued to exceed supply of homes for sale, which is keeping house price growth high. Number 2, mortgage lending standards today are nothing like they were last time during the housing bubble. It was much easier to get a mortgage than it is today. There were a ton of mortgages issued to purchasers with a credit score less than 620 during the housing boom in the pre-housing crash time period. Mortgage standards are nothing like they were last time. Purchasers who acquire a mortgage over the last decade are much more qualified than they were in the years leading up to the crash. Realtor.com notes lenders are giving mortgages only to the most qualified buyers, and these buyers are less likely to wind up in foreclosure. So here's the bottom line. A majority of experts agree we're not in a housing bubble. That's because home price growth is backed by a strong housing market, and the fundamentals and lending standards are much tighter today. And if you have questions, let's connect and discuss why today's housing market is nothing like 2008.